All right, traders, now we're going to have a look at an example of top-down trading. And what we see in front of us here is we see a Canadian dollar chart. Canadian dollar, this is my Canadian dollar workspace. So here we have the Canadian dollar daily chart, 4-hour chart, 2-hour chart, 1-hour chart, 15-minute chart. Then over here we have the weekly and the monthly charts, just for a basic reference, for periodic reference, so that we know where we are in the longer term for those of you interested in position trades. Let's have a look at our daily chart, because typically when you open up a day of trading, you want to start looking at your daily chart and look to see what some of the patterns may be setting up to see your basic key levels. And as we know, the Canadian dollar has been in a significant, here we see it's in an uptrend against the US dollar, or the US dollar is trending down. This is the dollar Canadian, so the US dollar is the base currency, and the base currency is falling, while the cross currency is strengthening against the base currency. We see price has made significant gains in a short period of time, but over the years, the last several years, it's done very well for a variety of reasons. Commodity prices, precious metals, oil, the price of oil and the oil sands and the oil reserves there, and there's a significant amount of capital flowing into Canada these days. But let's have a look at our daily technicals, and if we want to trade on this day, what we're looking at. We see here our last downswing runs from this high down to this low, is the last significant downswing on the daily chart. And this downswing occurs over a period of a couple of months. And what I want to do is I want to establish some of my key levels of resistance. And therefore, what I would do is I would take my horizontal line and place it at this low here. And I would look at this as a key level of resistance at some future date. Now, price has come up here. It's formed actually a head and shoulders down here, and it's come up and has been meeting resistance right up here at this level of 112.72. But we're in a downtrend, and we want to see where the price could retrace to on the downswings. And as we see here, price has come down and has retraced 38%, okay, right on 38%, as we are in an aggressive downtrend, and price has bounced significantly on the 38%. So what I'm saying to you here is that it's very important that you watch your major Fibonacci levels, major support levels, and resistance levels on the daily chart, because you'll often see major bounces like this. Do not trade into these significant levels, because you will probably get stopped out. You want to trade with these bounces. And for example, the price here, this candlestick opened at 111.76 and reached a high of 112.76. And it bounced all the way back and closed at 112.05 for a 70 pip bounce just on that candle. Probably was even more. It's a minimum 70 pip bounce just on that 38% retracement. Prices come up the following day, made another attempt at the highs. What does this whole scenario suggest to you? What it should suggest to you is that the next move is likely downwards. An attempt at the new lows, that we are in this aggressive downtrend. 38% retracement is aggressive, and down. Again, we have the 38, the 50, the 62% retracement, the 79% retracement, and 100% retracement. If price goes all the way back here, it has retraced 100%. The fact that it's retraced 38% suggests that we're in an aggressive trend. Now let's watch to see. Ideally, you want to trade as close to that level as possible. Now let's watch to see what price does in and around that level. Therefore, we will go down to our smaller time frames. Let's just have a look at what's happening on a 4-hour time frame. Well, here's that spike that you saw on the daily chart, and here's the retest that we just saw as well. Price slowing at the retest and the rejection. Look at the rejection of over 50 pips. Now, looking at our 2-hour chart, and I'm not suggesting that you go from the daily to the 4-hour to the 2-hour to the 1-hour. You don't really need the 4 hours and the 2 hours, but you can use them if you want. They're just a handy reference to have. I mean, I scroll through charts constantly. Here's what's happening on the 2-hour chart, and now we're aiming for our retest, and price comes up for a retest and rejects. Now we're looking at our 60-minute chart, and here price is tested. This is the 38% retracement level right here that we identified. This is the 38% retracement. Now price is coming up for a retest, and a nice, almost a hammer, and price starting to move lower. Now looking at moving down to our 15-minute chart now, we see the this here again represents the at the high of 112.72 represents the move to the 38% retracement on the daily chart, as we have seen, and price bounced from 112.72 all the way down to 112 and below, just on the bounce. Okay, over 70 pips, as we've mentioned. Now here's price, and let's watch price as it approaches these highs. Flows are becoming very weak now in an attempt to make new highs, but let's watch to see. Let's watch each of these candles. These are each 15-minute candles, 15-minute periods, as price and dealing moves its way up, up, making a go at the highs. And what I like about this is the faster this moves and the more parabolic this is, the weaker it gets. Now we see a dragonfly doji really close to the highs, which again we know this is a 38% retracement, and it's a significant level for us. And we know that we're in a downtrend. Therefore, we want to start looking at a short, and we like to trade these retracements to look for an opportunity to trade short. And you may want to think about it right now somewhere in this area, in the 112.50 to 60 area, with a stop above the 38% retracement high of 112.72, a stop above that level, and this is the previous day's high based on our rules of looking at the previous day's high, as well in the larger time frames. It's a significant level. This is an ideal trading scenario for us now, and let's look to go short. I would want to go short as close to this level as possible. That way my stop is tighter, and I can take my first profit sooner. We start to see a move below, and let's have a look to see what this looks like. Let's just use some of our basic tools here to see what's happening in the market. And we've got a trend line. So for those of you types who like to wait for confirmation, we have trend lines. And let's pull up a pivot point. So we will add our pivot point on here, and oh, this is a Monday, so we're going to get skewed a skewed image of the pivot point. So let's remove that until the next day. We'll have a little better version of it. Again, a doji. So if price comes back up here and tests somewhere up here, if you haven't entered the trade yet, you can still enter the trade short somewhere up in here possibly. Doesn't look like it wants to give it to us right now, so we may price, the further price starts to get away, the more we may miss the trade. But as time elapses through our day, we still may see price come up and give us a fill. Again, we're in the 1250 to 1270 range, which still gives us a nice tight stop. It's getting weaker now, all right, but we still could ease our way up to this level later on in the session because we're still early. And when New York opens up, because right now we're in the early London session, and when New York opens, we could see, or later London or New York, we could see a testing of these highs, which would really be ideal. Trend line is holding, and for those of you who like to wait for confirmation, you may want to wait for the break of this trend line. Slight divergence in the MACD, very slight, but that's natural considering the pullback down here. And let's continue to watch. If this trend line breaks, we could really go, but the more you wait for the break, the higher the risk you're going to have to place on that trade. Bouncing still, which could even lend to a bullish trade, but I'm not fussy about trading long into that 38% retracement on the daily chart. Let's go back now and have a look at the daily chart. You don't want to trade long into this 38% retracement. It's a fact. All right? Don't do it. Don't do it, folks. Now this is the one right here. All right? This could be the one, and if we went short somewhere up in here on the next candle with a stop above 112.72, so if we went short somewhere around here, let's say at 55, 112.55, with a stop at 75, we've got a 20 pip stop, and it still allows the market to move through, or you could wait for it to break through the trend line. Okay? Would have put you into the negative by a few pips. Price still deciding on what it wants to do. We are getting into a narrowing consolidation. And if price needs to continue trading below this current day's high, and obviously more importantly the previous day's high. But let's just watch the current day's high for now. Look at the battle that's going on here. Look how weak price is getting. We have prices moving in 10 pip segments, and the dealers are dealing within 10 pip parameters without any commitment either way. Once one of these sides gives way, we could really see a move. There we go. We got paid on the fill of 112.55. We went down to 112.15 on the ask here. And what's important is this, folks. This is what's really important here, is if you took, because we're at a potentially major turning point in the market, as seen here by the daily chart, but let's pull up the 4-hour chart. I want to show you something. Let's look at the 4-hour chart. Okay. This is a potentially major big move down this way. All right. And that's why when you take some profit, let's expand this a little. When you take some profit on this down move, you want to leave some on the table because it could continue down. And we're not seeing a divergence on the 4-hour. We're seeing a little bit of a topish formation here on the MACD. Yes, we're crossing through the the trigger line, but I don't watch that too much. Back to the 15-minute chart to get a closer look, and we are moving down, targeting the previous day's lows. And again, you see how important our daily lows are. Look what price does at the daily lows. Very important, folks. All right. You can trade just on that alone, on watching daily lows and highs. All right. Look at the bounce here. But you need to have some stones to make these trades. All right. You need to have stones trading against your feeling. So as we watch, price is coming down to these lows, struggling with holding below the lows, so we may start to move back up. Now, what we want to do is go back and have a look at what's happening on our daily chart. Price is making even another attempt at these highs, and the more attempts it makes and the weaker it gets, the stronger the possibility of a significant down move. Moving on to our 1 hour chart. This is the move that we just observed, and price coming down all the way to 111.20. Now it's a good move, 111.20 to 112.72, 112.65. Let's continue to watch as price may make another attempt here. Coming all the way back up, making another attempt at the highs, and again we want to watch that key level at what might happen here is we'd like to see it come as close to the 38 as possible, but look at the parabolic move we see here from 1160 to 112.80. Do you think that in you see these two lines here, you see how we have May 23rd and May 24th, and all of this price action is occurring in one day. Look at the volatility in one day. Well, there are only a certain amount of Canadian dollar flows that can be sustained or utilized within a one-day period, and I would think that to move from 111.20 all the way through and to hold above 112.80 is a real stretch, especially for the Canadian dollar. 160 pip move and have enough flows to move above and hold above 112.80 is a real stretch. So the closer this thing gets to 112.70 or 65, then you want to start thinking about a short here for two reasons. Number one, just the intraday retracement should pay you well. Number two, if for the long term that 38% retracement holds, then it gives you another opportunity to get in on a big down move. Look at the nice candlestick formation we have here. Price is slowing as we ease into late in the session and into Asian session. We see a very nice dragonfly doji, and I would say that there's a very good opportunity for a trade to be made in or about this area. All right. Now we obviously we are doing this in accelerated time, going one bar at a time. But if you're sitting here and watching it in front of your computer, and as exciting as that can be, we're going to try and move it at a bit of an accelerated level. But I think this is where you want to take a short, because look at the move it's made in one day. All right, 140 plus pips for the Canadian dollar is a nice move. Plus liquidity is drying up as we are late in the session. You see this candlestick here, how it moved down? So let's say you entered on the open close 112.50 short. It went as low as 112.22, so it went 28 pips. Moved 28 pips, then came all the way back up to your entry. It went 28 pips in your favor. Okay, let's say 20, 23, including the spread. Then all the way back up to your entry. most people, most amateur traders, the mass psychology would grind them down. And it would grind them down to such a point where they saw themselves in plus 23 pips in equity, and prices come all the way back up, and now they're negative 2 or 3 pips. What they would do, what the weak-kneed and wobbly-legged developing amateur trader would do, is they would get out now, all right, rather than focusing on the key levels that are up here and the strength that they have, and the big move on the day and the weakness that has been established as a result of the conclusion of the flows and the traders are going home. Highly unlikely we're going to move above new highs at this point. So don't be wobbly kneed and hold your short position. Now you get paid on your first payment, and you maybe scale off 50, 60, 70% of your position. Hold your stop. Price moves up and down as it naturally does, but where is it moving up and down? Well, it's moving up and down at support, resistance, and support. It's bouncing where the market is supposed to bounce. Very important that you know this, because price will test these levels. Traders know these levels, and they use them as their reference points. Taking a nice and casual bounce here. Why is it important to take profit? Because price could start to move up again here. Failed to make a lower low. The bears need to get below 112, and price needs to hold below 112 for the bears. Us bears, we still need to see price move below 112. Another thing you can do here is make note that price is consolidating and poising for its next move, either up or down. Trading, trying to hold below 112, as I discussed earlier. It's trying to hold below 112, and it's not doing a very good job, but that's the Canadian dollar for you. This is how long it takes, folks. If you want to get yourself into good position trades, this is how long it takes. You may take initial profit on an intraday level, but the remainder of the position may take several days to come to fruition. The reason why you need to be patient is because as soon as you get out of your position, or as soon as you look the other way, that's when the move will start to pay out on your initial analysis or understanding of the market in terms of establishing the direction or determining the direction that you thought the market may go based on the tools that you are applying to the market. Now let's watch price continue, and there's that 112 level that we need to get below and hold below. And if this thing starts to weaken, then we could see a pretty speedy move as we move into the new day. Now price starts to move down, and now testing the lows again, and you see these lows right here. I just want to use this as a reference point because we've seen a nice move down, and price may come back up and test either these lows or these lows at 1180. Price comes up, tests the lows, and then moves further below these lows and committing to new levels. And look where price stops. You see 11100? You see this previous low over here, 11100? Price stops right on 11100. And that's no coincidence. Traders are watching these levels. Then price continues to move lower. And after a move like this, it's kind of a breakout move or now a commitment to move lower on a whole. And now we see price will, as we move late into the day here, this line represents 0 hours GMT, and which is the quietest time of day. And we will start now to consolidate into this quiet time of day. Let's take this down now and have a look at our 15-minute chart to see how this move played out. We had our first attempt. There is definitely some profits to be made in the first attempt, and let's just speed this up a little bit. We moved down to 111.20, right? And then we saw a retest. This is really cool. You need to see this. This is 0 hours GMT. Yeah? Price comes down, trading dries up, consolidates in late New York session before Asia opens. Asia opens, London opens here. London comes down, tests 111.20, the previous day's low. And then what does it do? Then it moved up towards the 38% retracement. Again, look, 111.20 to 112.10, 90 pip surge after the test of the previous day's low during Asia. Now let's move up. We will condense this. Here's our key level right here, 112.65, and price is coming up and making a search at that level. Again, we saw 111.50 to 112.60, 100 pip move. Look at the flows that got used up in the day's trading. And we're now late in the day. We're at 8 p.m. GMT. And trading starts to dry up now as we test the highs of the previous day before giving away. And want to point out something here. It's all about understanding the market, folks. It's if you understand the market, you will make a lot of money in this business. This high, this intraday high, now lends its support to future price action as it becomes a distinct level. Coming up to 112.60, and a second attempt on the following day, and we start to see, let's look here a little closer, and some very choppy price action, light liquidity pushed things up, and then we see some rejection here, and this is where we start to see the moves coming down to 110.80 and below and consolidating after and absorbing a big move. Let's now have a look to see what that looks like on the larger time frame. Here is our, just give you another look at this. Here's our Fibonacci's pulled from this high to this low. It retraces to the 38% retracement. And this is a resistance support line right here, 38% retracement. So we know that this red line is a 38% retracement. And let's watch price move. Look at this, it tests it again. I love it when it does this because each time it tests it, you can take separate trades on it and still have a little bit on the table in case it decides to move. Something else I want to show you here is we actually saw a reverse head and shoulders. Reverse head and shoulders here where price came down all the way down to the 79% retracement and then extended up. This is the 127 and didn't quite get to the 162. But the deeper the retracement, the lower the extension we're going to extend to. And here the 127%. And let's continue to watch price here as we make several tests. Look at the weakness here. You see how each high is discretely lower than the previous high? That, traders, is a very telltale sign of a continuation downwards. And as we watch price, we see a real nice relentless move down into the 109 area. There, ladies and gentlemen, is a simulated trading example using multiple time frames, your daily, 4-hour, 2-hour, 1-hour, 15-minute, whatever ones you have you want to make use of, but constantly scroll through your charts when price action is moving. But what was really nice about this trade was the very fact that it was a nice reversal point on a daily chart. And we saw a real nice weakness here and price continuing downwards. And again, here's actually, this is a very nice hanging man and or hammer. It's kind of like a combination of several different formations, but the key here is that price did not hold and trade and close below this key level right here, which is very bullish. This was an economic report which can be disregarded, and followed by a nice up move for a good position trade on the daily chart, giving you a couple of hundred pips to work with. So traders, there you have it. Some example of top-down trading and some analysis and an approach and a broaden of understanding of the market for you. And hope that helps. And we'll see you in the next section.